Thanks for joining us on lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get straight to the headlines this Friday afternoon. It's a muted start to the month in the new series. Sensex and Nifty trading absolutely flat.
Macro cheer continues. India's manufacturing PMI jumps to a 13-month high in November, comes in at 52.6.
Auto sales for November coming in so far also show a robust trend, but remember, this is over last November when demonetization had hit sales across many automakers.
Nissan is set to file an international arbitration case against the Indian government for non-payment of state incentives promised by the Tamil Nadu government in 2008.
And a 3-judge Supreme Court bench rejects a plea seeking a special investigation team probe into allegations of bribery to influence the outcome of an earlier case. Also imposes a 25 lakh rupee fine.
Also on the show, economic scorecard with Ashima Goyal of the PMEAC and Siddharth Sanyal of Barclays, HDFC AMC's IPO plans. We'll talk about that with Managing Director Milind Barve, and UR Butt will talk about the markets and how he's confident that the markets will sustain at these levels.
Okay, first though, look at how the markets are shaping up. Neeraj, nice flat Friday.
Yeah, well, they are sustaining at the current levels if that is anything to go by. But yeah, it's a flat day of trade. Volumes too, very, very tepid, but you would expect that. The first day of a new series, and after a day which was very, very volatile, you'll probably expect this. So it's a flat day of trade in today's session. I was looking at stocks which are moving around on the index, not too many, frankly. A top gainer and the top loser about 1%, but technology has mixed trends. So TCS and Infosys, just pointing that out. There are divergent moves that are happening in both of these names in today's session. Otherwise, it's a ho-hum kind of a move. The auto sales impact is seen in specific names. So if you look at what happened to Bajaj Auto after the numbers slightly below estimates, marginally off, Escorts corrected. Not the best of numbers. This is on expected lines, mind you. If you heard the management beforehand in the last month, he had mentioned that November and December, according to him, for the industry at large and for Escorts will not be that great. And that stock is down. Ashok Leyland and Maruti have a decent day in trade. Ashok Leyland in particular actually doing rather well. Some of the textile related, hosiery, etc., that set of stocks have done well today. Small cap and mid cap, so anything from a Dig Jam to a Rupa and Company, VIP Industries, etc., all of them seem to be having a fairly decent day. But I just want to pull out two charts. One of them is L&T Technology Services. Now, never mind the fact that people believe that this is an expensive mid-cap name. It just continues to rise and shine. This is the intraday move. If you look at the last 1 month, it's given 30% returns for a technology company. I know you've seen instances of Nucleus and some of the others moving like this, but L&T Tech over the last 1 month, 32% returns. That's quite steep. And then we don't normally talk about Gillette, but look at the YTD return that an MNC of this stature has provided, 52%. It's a big move. Yes, you can argue that volumes are very tepid here, and therefore it's very easy to a stock like this to go up on small set of buyers, but it's not something that has really happened in the past. But yeah, 52% returns this year. And then I mapped the returns of Gillette since it got listed. Take a guess. Annual returns that Gillette has provided, 22%. Annualized CAGR returns that the stock of Gillette has provided. That is just phenomenal. I don't think even probably Reliance has done this. So it's for all this talk of it not having volumes, etc., this has been one big mover since inception.
The best a man can.
The best a man can.
All right, let's move on now and talk about India might be Asia's most expensive stock market, but investors can't get enough of it. Though China remains a huge opportunity, says Aberdeen. Bloomberg News' Nupur Acharya is here to tell us why they prefer India to China. Nupur.
So the statement couldn't have come at a better time. So last month we got our much awaited sovereign upgrade after a gap of 14 years. A month before we jumped 30 places to rank 100 in the ease of doing business. So obviously more love is coming our way, and who's complaining really? So for Aberdeen, which is, mind you, a powerhouse of a money manager with over $900 billion as assets under management, for them, India is the favorite emerging market, and for the reasons very, very obvious. Obviously, that given that there are well-run, good companies with good corporate governance, the macro fundamentals are looking up. The bond yields at 7% is a really great value. So India takes the cake.
Do we know what pockets of the Indian markets that they find more attractive?
So they named two companies, and the obvious choices: the Hindustan Unilever, the consumer giant, and HDFC. Mind you, both of these companies have gained more than 50% in this year. So they are the top picks which they mentioned in that interview.
All right, Nupur, thanks so much. Some love coming the way of the Indian economy as well, which looks like it's, well, maybe finally on the mend. The PMI data that came in this morning suggesting an uptick in manufacturing activity. GDP data released last evening also shows that growth may have bottomed out. Core sector data, however, suggests that the recovery is still tentative. Let's get into each of those data points individually. Take a look at the PMI numbers. The manufacturing PMI numbers were extremely strong. You went from a 50 kind of level to a 52 level, and this is about a 13-month high for the Nikkei India PMI. And the release that came together with that data suggested that they are seeing a growth in both output and new orders, and these picked up to the fastest rate since October of 2016, reportedly supported by a reduction in GST rates and stronger underlying demand fundamentals. That was a really strong economic report. The more important number, though, of course, was the GDP number, which came in late yesterday evening, the second quarter numbers. Just going to run through some of the key aspects of that and some of the views that have been coming in on the GDP numbers. 6.3% was the growth number, and of course 6.1 was the GVA growth number. We're focusing on a couple of sectors within that and pointing out the fact that agriculture this quarter was a little bit of a disappointment with weak growth at 1.7%, but manufacturing surprised positively with 7% growth. Construction and financial services remained weak as well. So those were the sectoral breakups. The more important change perhaps came in the expenditure side trends, and there you got a sense that maybe there is some weakness creeping into private consumption, but some pickup in investment. So gross fixed capital formation grew at 4.7%. That was a good number. Private consumption grew at a moderate 6.5%. Export growth remained more or less static. Those were the key trends that came in from the headline GDP number, from within the headline GDP number. You can slice and dice this number various ways and see what it suggests. But overall, it was a number which is slightly below market expectations, but still showing some positive trends.
Interesting that. And what are the key issues for the Indian economy to spur growth in a sector which generates employment? These three key sectors are manufacturing, agriculture, and construction that took a hit due to demonetization and then GST. Bloomberg Quint's contributing editor Praveen Chakravarti takes a look at whether these sectors have actually recovered.
The big question around India's economy right now is to find out if it has recovered to its pre-demonetization levels and shaken off the impacts of demonetization. To find out, I use a three-sector GVA indicator of agriculture, manufacturing, and construction. These three sectors account for almost all employment in the country and are perhaps being the most affected by demonetization. So before demonetization, these three sectors grew roughly at about 8% in nominal terms and about 6% in real terms. After demonetization, there was a clear impact where the growth in these three sectors declined to as low as 1.5%. Surely this quarter, it has seen a bounce back. So the trends in the recovery of these three sectors is right. But the levels are still below where they were before demonetization. Hence, the trends are right, the levels are perhaps not yet there.
All right, the question now is, where does the economy go from here on? How quick is the recovery going to be? Nobody knows the answer to that, but the one question that we do know the answer to is that whatever recovery happens will happen on the economy's own steam. By that I mean that the room for fiscal stimulus or monetary stimulus appears to be limited. That's the view that we got from Ashima Goyal, a member of the Prime Minister's Economic Advisory Council, and also Siddharth Sanyal of Barclays, who joined us on a conversation earlier today. Listen in.
Yeah, I think that this government is very committed to meeting numbers it has announced. So there's not going to be, too much expansion in the fiscal deficit. If there is any slippage because of the changes in the tax regime. But with the next budget, you might see some relaxation on the path in line with the FRBM. But any relaxation is only going to be in line with the FRBM, and that gives, the new committee also gives a 0.5% GDP space to relax on the deficit path if there are structural changes. And there are major structural changes in the Indian economy. But, nothing is certain just now because you have to see the numbers. It may be that GST, which expands the tax base, will really result by that time, will show a considerable tax elasticity. The efforts at increasing direct taxation, even that tax base is expanding. So depending on what happens to tax revenue, if necessary, there will be about 0.5% GDP space to relax on the fiscal consolidation part.
So that's sorry, ma'am, you were saying?
Yeah, but any stimulus is going to be marginal, it's going to be small. It's not like after the global financial crisis there was a 4% increase in the fiscal deficit. That is not going to happen. So that is why I feel that the space, both monetary and fiscal, is somewhat limited.
Yeah.
But there is room for the structural reforms to play out positively, both in affecting demand and the cost.
Okay. Siddharth, you want to come in? That doesn't look like there's fiscal space. I mean, even if there is, you go from 3.2 to 3.5, it's not like you're creating that spending space.
Right. Well, it's a couple of things are pretty clear at this juncture, that there is a lot of uncertainty around the top line or revenue. Now, I'm saying uncertainty, not necessarily it's very bad. We still don't know whether it's good, bad, ugly, or even excellent. Right? We need to see a few more months' number. The new tax regime is way too new for us to make a clear judgment on that, and we need to give it a little more time. What is clear is instinctively this government is not really willing to go for big bang expenditure cut just to meet the numbers. So that's possibly where the hesitation comes from. But at the same time, they remain reasonably committed to meet the fiscal numbers as they have displayed over the last few years. So our sense is that there will be some kind of a real balancing act going ahead, and we won't be too surprised if the current year numbers ultimately come broadly in line with what the government had been talking about. Right.
So it's near about 3.2 somewhere.
Yeah, that's very
here or there.
That's very clearly their endeavor, and as that came out from Professor Goel's comments as well.
But how will they, jump in here? We know, like you said, there's uncertainty, but how will they stick to those numbers? You're at 96% of the fiscal deficit target.
Where is the space?
Yeah, where is
well, if you see that particular aspect, I'll not be too worried just looking at that 96% number. If you just plot this particular chart, that what percentage got hit in which month, this is a very usual seasonality that in certain months they hit 96%, they cross 100%, and they pull it back later on in February and March. It's not ruled out.
So that's Sanyal talking about the economy. Let's move on now. There's yet another asset management company queuing up to debut on Dalal Street. HDFC and Standard Life plan to dilute their stake in HDFC AMC through an IPO. To tell us more about this plan, we're joined by Milind Barve, a Managing Director at HDFC Mutual Fund. Mr. Barve, thank you so much indeed for joining us on Bloomberg Quint. Appreciate your time for us. Could you take us through how much money do you plan to raise? How much are the promoters diluting through this process?
Yeah, so what the board has resolved and announced yesterday is basically two things. One is a decision to list the asset management company. That's the first thing. As you're aware, effectively you can achieve the listing by diluting 25%, but over 3 years. So the pace of dilution has not yet been decided. Effectively, the decision has been made to list the company, which involves a 25% dilution over 3 years.
Okay, so no clues, sir, yet on when you start the process, how much you dilute in the first tranche. Would it be at least up to 10% in the first tranche, sir?
Yeah, you're right. The minimum is of course 10%. Work on the IPO process actually begins today. Once we have the board green signal. So I think it will be in the course of the next couple of months that the board will really finalize how much. 10 is the minimum, so how much we should be diluting in the first tranche. I think that number has not yet been decided, but it will be of course something above the 10% minimum.
Okay, so
as things stand, I mean, I can add that it probably will be more than one tranche. Yeah.
Okay, just a broader question, Mr. Barve. What is the thinking behind this? Why go public? Why list the company?
So as you know, I think if you look at any of the HDFC group companies, they're all been listed, or largely most of them are getting listed. So we've been in this business for about 17 years, so that the business has reached a degree of maturity. And as the basic philosophy of the HDFC group has been over time to list businesses as they grow to a certain size. So I think the philosophy is two or three things. One, it's just to bring the greater degree of transparency and accountability in the business. I think it's a healthy thing for any asset manager to be listed because it makes them more transparent, more subject to disclosures. So I think it's a matter of time. I would expect hopefully more asset management companies will list. As far as our company is concerned, it's been the philosophy of the group. Both HDFC and Standard Life have been committed to list their subsidiaries over a period of time and unlock value for the shareholders. And I think our company listing is a step in that process.
Sir, also timing is, I guess, good, and I'm sure you took that into account when actually taking the final decision. Now, we've had a good run for the mutual fund business over the last, couple of years, actually, but specifically over the last 1 year. And I think everyone seems to be assuming that those good times will last.
So timing has not been the reason for the IPO. I think we've just decided to list, and we will complete the process, and then we'll go to the market when we are ready. But yes, I mean, for the whole industry, this has been a good phase, and we are no exception to that. So I don't think the timing of the issue or the decision to list has much to do with the timing or the state of the IPO market or anything like that. I think it's an independent decision which we would have probably taken irrespective of how the IPO or the primary markets have been in the last couple of months.
Mr. Barve, let me take the liberty to ask you.
I don't think we want to appear as being opportunistically trying to tap market. Yeah.
So, sorry, finish your point.
Yeah, go ahead. No, I was just trying to say that I don't think we want to be just opportunistic in trying to do some capital raising in the market when the IPO markets has been very strong in the last couple of months. I don't think that's the driver to a decision to list a company. To list a company is a much more profound long-term decision. So the timing has very little to do with it in my mind.
Okay. So I'm just taking the liberty of asking a slightly broader question, and this is about the mutual fund flows that we have seen in the last 1 year. 2017 will definitely be a milestone year, the kind of SIP money that's come into the markets. What have you made, A, of the quantum of flows that have come in, and secondly, the durability of it? Do you think there is, this is seeped in enough that you're going to sustain, these level of inflows are going to sustain in the next couple of years too?
Yeah, so clearly, if you look at the industry flows in the last 3 years, before this current year, the industry got 80,000 crores into equity in 14-15, 85,000 in the following year, that is 15-16, and in the last financial year, we got something like 93,000 crores in equity-oriented funds in terms of net new flows. And if you just look at the first 6 months of this financial year, in the first 6 months, the industry collected 107,000 crores, which is more than what the industry collected the whole of last year. So clearly, there's a very strong momentum, as we've been discussing this in the past for some time. There is one important macro phenomenon which is playing out, which is very important, which is a shift from people's saving habits from physical assets to financial assets. But the more important thing, which is more important and relevant to our business, is within financial assets, where has these household savings been directed to? And I think what is happening very clearly is that there is a little bit of a shift away from bank deposits. Bank deposits, mind you, are still growing at a healthy rate of 10-11%. But the incremental savings into financial pool is coming into more capital market products like both insurance and mutual funds. So we as an industry are benefiting from these two trends. These are very, very deep and very profound trends. And one expects, so the right question is to ask ourselves whether this is something which is going to be sustained, or is it been something which is last for just one or a few months. But we are now into the 4th year of having seen such strong flows. Now, either some of it could be cyclical, probably some of the flows coming into debt funds might be a part of a debt cycle. Interest rates have been coming down. We probably close towards the end of the rate cutting cycle. So some element of flows coming into debt funds I would attribute that to some degree of cyclicality. On the flows coming into equity products, there could be a cycle, but it could be a very deep cycle. A deep cycle is the one which kind of runs for 5-6 years. What I see happening in the behavior of Indian investors or savers is that there is a multi-year asset allocation catch-up that is happening on equity as an asset class. And I think that people are choosing that asset class through mutual funds. So I think in that sense, I feel fairly confident that the flows into the industry will sustain. You could have a month of flows being a few thousand crores less or more. For example, you had, I think it was August 23,000 crores, September was 20,000 crores, and the 16,000 crores in October looked a little softer. But those numbers could be in that zone of being somewhere in the region of 12, 13,000 to 20, 25,000 crores. So I think you could see a good month or a good quarter, but these flows look reasonably durable in at least the foreseeable future in terms for the industry itself.
Mr. Barve, I'm glad you asked and answered that question yourself, because otherwise journalists are blamed for being the skeptics in this market. But I'll ask you about one more structural change, sir, which is, or at least a structural change that the regulator has been attempting, which is to get more flows from outside the top 15 cities, go into the interiors. For your own AMC, how has that played out? So what proportion of the incremental flows are coming in from outside the top cities? And if that proportion is increasing, what is the implication for expenses? Because those markets are far tougher to tap than some of the larger and well-penetrated markets.
No, so I think it is some time back, almost 4 years back, when SEBI came up with this new sort of formulation for penetrating into what we call as the B15 market. It's about 3-4 years back. I think it's made a incredibly strong impact in the flows that are coming from the smaller towns. We in our industry keep referring to them as the T15 and the B15. So the B15 flows have been very strong. I think if you look at the industry data, the number of customer account folios, as we call them, is now incremental flows are coming more in B15 as compared to the top 15. So I think one of the objectives of the regulators and the industry in penetrating the markets beyond the top 15 is getting met, and every month we are seeing that flows into B15 getting stronger and stronger. As for us, the numbers that I recalled in the past, we have about somewhere close to, we are probably the second or the 49,000 crores or 50,000 crores in terms of assets from B15. So I think our focus, and we are a scale player, so we want to sort of have our products bought into every small town and cities. We have more than 170 branches that we work out of, and a huge number of distribution people who are really our sales force. They are our business partners who are the messengers of our product to the customers. And I think they're doing an incredible job. So my sense is that this whole idea of the B15 incentivization has worked very well, and I think it's worked as much for us as well as the industry. I think it was an incredibly innovative way of creating a financial incentive for distribution community to sell products, because the mutual funds, as much as the growth numbers that we can talk about and we can talk of the big numbers that we have grown by, it's still seriously underpenetrated if you look at the industry data. I mean, mutual funds as a percentage of GDP or equity mutual fund as a percent of GDP is still one of the lowest, even among some of the developing countries. So we have a long way to go if you look at really when you talk of penetration. We can look at the rear view and feel happy about our growth, but we have, I think, an incredible opportunity to grow just by penetrating to new customers.
Sir, I have just one final question from my end. Recently we've seen the market regulator try and sort of streamline and bring in classification for various new schemes, particularly when they're classified by virtue of their market cap, either large cap or mid cap. Do you see any of those classification norms being restrictive for your business?
No, I don't think so. I think this has been I think we as an industry through AMFI really has been in dialogue with the regulators for a long period of time. And I think the regulators have done extremely well in coming out with what they have defined as product categories and fairly well defined what the category should be. And of course, the more important agenda was also to have not more than one fund in each category. So I think this has been in work in progress for a bit of a time, and I think nobody can say it has taken us by surprise. And for us as a fund house, I don't see anything that's going to be seriously business impeding in any way. It will need some realignment of products or some merger of products from A to B, but I think largely it's a good thing. If you recall, mutual funds came into being because there are 5,000 stocks to choose from, but effectively what has happened with so many fund houses and so many fund products, it became a bit of a challenge to just choose mutual fund products from. So I think this kind of rationalization, what I see in this, the real merit of this exercise is not just the rationalization or the reduction of the schemes, but a better definition of schemes or what that scheme is intended to achieve, and what is called globally as the truth in labeling. So if I call a fund a large cap fund or a large and mid cap fund, it should genuinely have the large or the large and mid cap as the fund's template describes the fund. I think that is a very good move because it helps the customer understand a little bit more easily about what is inside this fund. And I think that's in a way I would not really complain about it. It's actually a very customer friendly or a distributor friendly measure because it helps clearer understanding. There could be some steps involved in as we all transition to this new regime, but I don't think we should complain too much about it. The end should be better than where we are now.
All right, Mr. Barve, one last quick question, because I know that I may not get an answer from you, but I have to ask in any case. I think markets are anticipating a valuation somewhere in the 35,000 to 40,000 odd crore. They're expecting your profitability ratios, your brand to command a premium. Would a number like that satisfy you, sir?
This is exactly what I'm not supposed to speak about, and I stick to that mandate. So I think that market can speak anything about what our valuation is. We'll be the last ones to talk about it.
All right, Mr. Barve, thank you so much. Pleasure speaking to you today. Appreciate you taking the time to join us.
Thank you. Thank you.
Okay, let's move on. Actually staying within the space. Mid-cap stocks in India could get a 19,000 crore boost. That's according to a CLSA report. The brokerage house, which has based its report on a SEBI circular to mutual fund houses, says most schemes don't comply with the market regulator's intent of putting a minimum limit that needs to flow into individual schemes. Somit Sarkar joining us with the details. Somit, essentially they're saying that schemes are not meeting the mid-cap investment limits and hence need to up that.
Yeah, that is there, but there are two important things that have been cited in the CLSA report because of which the mid-cap stocks can see such kind of inflow. First is that SEBI has defined what is a large cap stock, mid-cap stock, and a small cap stock. Earlier, this definition was not there. So, according to SEBI, a large caps, they have defined the first 100 companies by market capitalization as large cap, the 100 to 250, the next 100 to 250 companies as mid cap, and 250 onwards, they will be small cap. So, this list of stocks will be given by AMFI, that is Association of Mutual Funds in India, in half yearly. The first they'll give it in June and second in December. And the mutual funds will have around 1 month time to realign their portfolio. So this is the first change that could lead to the stocks money inflow into mid-cap stocks. The second is they have given the minimum allocations. Now for multi-cap, the minimum allocation is 65% of its asset into equity. For large cap, it is 80% of its asset into large cap stocks. For large and mid-cap, it is 35% in large cap, 35% in mid-cap. For mid-cap, it is 65%, and for small cap, it is 65% of assets in a small cap. So most of the large cap and small cap already comply with this, but it's the mid cap where they haven't complied, and because of which there could be this flow into equity.
Somit, thank you for that. The Supreme Court, meanwhile, has dismissed a plea seeking a probe by a special investigation team into allegations of bribery for a case which is being heard by the Apex Court. A 3-judge bench also imposed a fine of 25 lakh rupees on the petitioners. Arpan Chaturvedi is standing by on the phone line with us. Arpan, what was the plea about and why the fine?
That's right, Harsha. So this petition, which has been dismissed today, was one of the two petitions that were filed in the Supreme Court, and this case basically relates to the arrest and a subsequent CBI FIR, and the arrest was of certain middlemen and a retired Odisha High Court judge. What the FIR says is that there was a conspiracy, and these people were seeking bribe to influence the outcome of a particular case. Now remember, the FIR does not name any of these current sitting judges of the court, and what the petitioners were saying was that this is a sensitive case where some middlemen and a retired Odisha High Court judge had been arrested, and such a sensitive case should not be left to the CBI to investigate, but that there should be a special investigating team preferably headed by a retired Chief Justice of India. The court has dismissed this case, and just like the earlier petition, which was filed by lawyer Kamini Jaiswal, in that the Supreme Court had said that the conduct of the petitioners amounts to contempt. but they had not initiated any contempt proceedings. Today, again, the petition has been dismissed. As far as what we have understood, there's no contempt proceedings initiated against the petitioners, but the new thing that has been in this particular judgment is that fine of 25 lakh, which has been imposed. Now, what are the specific reasons and the detailed order? We need to wait until the final judgment is uploaded, where we can understand why the Supreme Court imposed this fine and certain other aspects. But for now, yes, this was a second petition which was heard by the same bench which earlier heard the Kamini Jaiswal petition, and now both the petitions have been dismissed by the Supreme Court, saying that there is no need for a separate SIT probe in these matters.
Arpan, thanks so much for bringing us those details. Nissan Motor has begun an international arbitration against the Indian government. That's going by a report from Reuters. The car maker is seeking more than $700 million from the government for unpaid state incentives that had been promised by the Tamil Nadu government. These are all details coming in from the Reuters report. And these compensations were due when the two sides had signed an agreement in 2008. The news agency, which quoted unnamed sources in the article, said that repeated requests sent to the state officials for payments due in 2015 and another plea made by the company's chairman to Prime Minister Narendra Modi last year did not yield any results.
All right, coming up next on the show, automakers report double-digit growth in monthly sales. We'll tell you more in just a bit.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines at the half hour. Indian markets start the new month on a flat note. The Sensex and the Nifty trading without gains.
Steepest hike in 11 months for aviation fuel as oil prices continue to hover above the $60 mark.
Automakers have opened their discount coffers to lure customers in a bid to keep car sales going in December.
The government is looking to use Aadhaar as a tool to crack down on Benami property. All right, halfway through the show, let's do a quick check on the markets. Navneet is here to take a closer look.
Well, Asha, clearly it's been a weak start, though we did have a gap-up opening coming about, but clearly Nifty could not sustain the opening gains and it's gyrated almost over 70 points. On day one of the new series, it may not be a great sign when you have India VIX inching higher to almost 5 to 6%. It did touch that mark of 14.5, which is a very crucial mark according to few analysts. So watch out for that. India VIX is currently trading with gains of as much as 5%. Some respite, though, coming from the broader markets, which have been maintaining their gains. In fact, if you look at the advance decline ratio, that's been in favor of the advances. Mid-cap index is up almost 0.6% and small-cap index has also seen gains of 0.5%. NSE stats is showing that advances are higher than declines. Almost 2:1 is the ratio there. In terms of sectoral indices, clearly the IT pack is pretty weak today, right from the word go in the morning. The Nifty IT index is down as much as 0.6%, and the major losers there are KPIT as well as Tech Mahindra. And not only that, actually, even if you look at the IT Nifty constituents from the likes of HCL Technology, Technologies and Infi. These are the counters which are actually dragging Nifty lower in today's session, as Infi has major weightage on the index. In terms of gainers, Ambuja and Tata Motors are a couple of your Nifty constituents which are still maintaining their gains. Ambuja is your top gainer with gains of almost 1.6%, and HDFC, which has almost 7% weightage on Nifty, that's been trading in the red, so that's bringing a bit of pressure when it comes to the movement on Nifty as well. The auto stocks are in focus, and Ashok Leyland particularly, the November sales figures are higher, also, as much as 51%, so that stock seen gains of 3%. Maruti also sustaining the gains, trading with gains of almost 0.8%. Some sort of brokerage share coming for stocks like Steel Authority as well as Talwarkers. You had Phillip Capital, which has upgraded the counter of sale from sell to buy, and Talwarkers Ventura has initiated a coverage. Both these stocks have been trading in the positive territory. Just a couple of stocks from the broader markets which have been outperforming. Vimta Labs, that's locked in upper circuit with gains of 20%, and you also got stocks like VIP Clothing, TRF as well as Simco, which have been trading with gains of between 13 to 16%.
Thanks so much, Navneet. That's the structure of the market. The view on the market, of course, remains similar to what it has been for the last few months. Yes, they may have run ahead of fundamentals, but they could sustain here given the kind of liquidity that we are seeing. UR Bhatt of Dalton Capital spoke to us about the big picture, but also raised some concerns around specific segments such as real estate. Listen into a slice of that conversation.
I mean, till now we did not have the macro supporting, did not have the earnings supporting, but still the market is going up. At least now one of them has fallen in place. Now I think the earnings pickup should happen probably by at least the March quarter, and that is when I think all this sort of celebration is justified. But if that doesn't happen, I think we still run the risk, especially because international events can take the FII interest in the Indian market away. So therefore, I think that is something we need to closely watch. But at least the fundamentals are probably in the right direction as far as the market that has been celebrating a turnaround in the fundamentals for quite some time now.
What leads the move higher, Mr. Bhatt? I mean, banks are now looking like a tired lot, to be honest, and PSUs after that one big day haven't really been able to make any kind of headway. Private banks, we all know, are in a manner of speaking valued fairly well. NBFC is a different kettle of fish, but not really too many NBFCs which are that market moving, say for that matter HDFC per se. So what really takes center stage if the markets were to head higher?
Well, I think it's nobody's argument the markets will head higher dramatically from here. It is just that it is possible to sustain these levels. Because actually, as far as valuations are concerned, valuation of the argument has lost focus quite some time back. It is basically liquidity, and if the liquidity continues, even with probably some selling by FIIs possibly, I think the market can probably sustain these levels, given that some good news is coming around the corner.
Okay, are you a buyer of real estate stocks? And the reason I ask this is evident. I mean, I don't need to spell out the reason. The price movement is there for everybody to see.
Well, I think the good news on the real estate front has really not yet been seen, because quite like RERA and the demonetization has really affected this sentiment here very, very dramatically, and there is still quite a lot of unsold stock out there. So therefore, I think the first signs of revival in the sector are not exactly seen. It's exactly like what is happening in the market, that expectation that things will turn around, and that is what is probably keeping these stocks at these levels. But I think the turnaround is something that we have not yet seen, and maybe it will happen after some time. But right now, I think it's too early for us to take a bet on this.
But on the markets. Meanwhile, the government wants to use Aadhaar as a weapon against Binami property. The Prime Minister was speaking at the Hindustan Times Leadership Summit on Thursday, said, and I quote, Aadhaar will now be used against Binami properties, and this will become a big weapon for the government. So how will this be implemented, and is it easier said than done? Especially since it means digitizing all existing property records and getting owners to come back and update their numbers. Joining us now is prominent tax expert T.P. Ostwal to talk about the entire process. Mr. Ostwal, thank you so much for joining us. How do you think this is going to work? Particularly, and it looks like Aadhaar is going to be the sort of the route that the government wants to take to crack down on Binami property. What's your sense?
In my opinion, this is a correct stand, and it is not difficult to implement, because land records are already there with all the regulators in every state and every city, and therefore first of all the government can compel every owner of the land or owner of the assets to go to the land authorities and get the Aadhaar registration done mandatorily. Without that, they will impose the restrictions, and including on a property tax. Possibly there could be number of sources where from the Aadhaar linkage could be done. One is the land record, second is the authority, municipal authorities or the local authorities which raise the taxes on those properties. Then they can say you can come and do, otherwise we will not provide you certain services, and we would possibly levy penalties on the payment of taxes. And therefore this will become very, very relevant, and everybody possibly will be compelled, like what has happened in the credit card, the bank accounts, the insurance policies, and possibly the way of living in the future will be, the basis is Aadhaar. You want to travel by airlines, you want to travel by Rajdhani or trains, Aadhaar. Any government department, Aadhaar will be must, and possibly even private sector. And this is going to really be, this is a major step the government is taking. And I was thinking that on the anniversary of the demonetization, possibly the government would have, Prime Minister would have announced this state position, but he did it yesterday. And in my opinion, the intent and purpose are laudable. We must support the government.
Mr. Oswal, I was just going to say this is sort of the property market equivalent of demonetization. Now, obviously, it would be far easier to do this prospectively, but it will probably not have the impact that it is intended to have unless it is done retrospectively.
Well, it will happen retrospectively, because unless all the properties are brought under the Aadhaar linkage, how it is going to work? Whenever you want to buy or sell the property, it will not happen without the Aadhaar linkage. And therefore, they will make it mandatory, and hence, on one hand, they will start registration of the existing properties or the new transactions. On the other hand, they will tell on the back end, every owner of the property will have to come and register, or maybe a digitized method of registration Aadhaar number, because everybody has an Aadhaar number. They have just to link it with the property details. That's all.
So if I can just push that point a little further, Mr. Oswal. So if I'm a genuine taxpayer, for this to work, I mean, would a genuine taxpayer be put to discomfiture? He has to go back to his registrar, get his Aadhaar linked to the property. Is that what you're suggesting?
No, possibly when he does the transaction of buying and selling, at that time Aadhaar will be linked. And second thing, the existing, as one question which was put up, retrospectively whether it will happen. In my opinion, it has to happen retrospectively. Every property which is on the on somebody's name, they will have to register. Now there are some issues which are likely to arise, because some of the properties which are under succession, the owner has died, the property is under the dispute, and the matters are pending in the courts. All those, and sometimes the owners are not traceable. Those issues will come up, and therefore the government will get the idea as to what is the whose property, whose property the particular property is. That government will come to know, and if the properties, then it will be easy to mine the data to find out which are the properties where Aadhaar card numbers have not come in, and if there are disputes, possibly they will have to be brought into the records.
Sir, would this measure, if it were to happen, sort of go together with the amendments to the Benami Transactions Act, which I think happened last year?
It is going to measure everything. One is Benami Transaction Act. What you are saying is correct. Second is the today's major areas of the black money creation or generation or preservation is the buying of properties. And mostly all the government officials which are corrupt officials, they take bribes and the monies from the people who are for enabling them to do the transactions. Where their money goes? Their money goes into the real estate, and they buy the properties, showing the properties at a very low value, and the differential over and above the ready reckoner rate they pass on by cash, and that is how they preserve their black money. And those avenues will stop in the future, and that will be the area. Possibly the ready reckoner rates will have to be also tweaked, and they should come out with the realistic rates, so that automatically the transactions will come to the forefront of the government.
Okay. A final question, sir, and this is actually, does the idea of Benami go away by doing this? That's my first question. Second is, we're also talking at a time when the Supreme Court is evaluating the idea of the government moving to link Aadhaar with various things. Your response to both?
The Supreme Court has today also given a warning to the government. Now the government is seeking deadline extension up to 31st of March, and Justice Rohington Nariman very categorically said, every time you come out with an extension, what is the guarantee that you will not come out with the next extension? So we want a clear-cut assurance, and the government is very clear. They are trying to accommodate the difficulties people have, and the Supreme Court want to put the foot down, saying that nothing doing, you put some deadlines. But I don't think it can work. A deadline cannot work. The little flexibility is essential to implement any particular step which is happening for the first time in such a massive country. We are the second largest populous country, and this measure has been adopted by us. China does not have such a measure. So therefore, we will have to wait and watch. We can't just put a Supreme Court also cannot just say that this is the last opportunity. In my personal opinion, they will have to take a practical measure, and the government is compelling everybody that by giving a particular deadline, so that at least 80-90% people can come forward and register it. Remaining 10%, there are genuine difficulties. People are traveling, people are not available, people are in hospital, people are sick, properties are in dispute. So those cases the government want to possibly extend, and therefore the extension should be within the purview of the government's power, and that should be based on the difficulties they get it. But I believe overall, either take the Supreme Court or the government, the desire seems to be going ahead with the scheme, and hence this is going to happen.
So just a last question from me, so just to take the point that you were saying, I think one of the criticisms that has been made against this government is that a lot of things sort of get done in a hurry, whether it's demonetization, decision to demonetize, GST. People are a little bit critical about the timelines over which some of these very sort of monumental changes are put in place. The same would hold true for this Benami property issue. I mean, in your judgment or in your understanding, if something like that were to be implemented, would it need to be implemented over a long period of time? But if you do give that long period of time, people get out of the net. So it's a really tough place to be in.
So therefore, this is the first step. The Aadhaar linking of the property will be the first step, and therefore what you are saying is correct. It has to be implemented in one go in a short term. You can't give an indefinite period. For example, in demonetization scheme also the government gave 50 days time. That is how 99% monies have come back to the system and they got converted. Had the government given less time, like Morarji Desai gave in 78, 10 days time or 15 days time, possibly the things would have been different. So therefore, today the size of the money is also important, and that's why government felt reasonable, and they gave a lot of concession one after the other. You encash at petrol pump, you encash at retail, and all those people have manipulated the system. And therefore, looking at that, in my opinion, the steps taken and implementation by giving less possible time is the most appropriate thing. Benami is one area where the government is required to be seen, but the Benami generally will not surface just on the basis of Aadhaar card. They will have to go into the details of the funding of those properties, who has funded the properties. Then only they will come to know who is a Benami and whether it is a Benami or not. If suppose I buy property out of my own resources, it is not a Benami. If I have taken loan and I can substantiate the loan, it is not a Benami. But if I have given money to somebody and who has bought the property and I can't explain the source, then it becomes a Benami. And therefore, it is genuinely a challenging and difficult task. But I think there is a desire which is essential, and this government has a complete desire, and they have taken so many unpopular steps which possibly could impact. Today's Prime Minister's statement, yesterday's statement, clearly shows that I am ready to suffer the loss. But that is the desire a politician should have. And unlike the previous government where people were not speaking at all and they were tolerating everything because they themselves were involved. So therefore, I think this is the right step the government is doing.
Okay, sir, we leave it there. Thank you so much indeed, Mr. Oswal, for joining us with your views. That's the potential Aadhaar linkage to Benami property. Let's wait and see how that plays out. Let's talk about oil now. OPEC and its allies agreed to maintain oil production cuts until the end of 2018. The world's top oil producers like Saudi Arabia, Iraq, Iran and Russia extended their campaign to win back control of the market from America's shale industry. The deal was even beefed up through the inclusion of Nigeria and Libya that were originally exempt from these curbs. However, prices continue to remain stable, Brent hovering just around that 63 to the dollar mark.
All right, now those rising crude prices have obviously also sent the prices of aviation turbine fuel higher. Another hike was just announced. Amit Sarkar is joining us with the details of the implications, but also over a period of time. How much have prices gone up?
This is the 5th consecutive monthly hike, and now the jet fuel prices will cost us around 59,000 rupees per kiloliter. Now, this is as compared to 55,746 rupees in the last month. Now, this is the in the month of December, ATF prices have been hiked by around 5.8% compared to which is the highest in the last 11 months. And January, the prices were hiked by around 8%, and post that, this is the highest month-on-month hike of 5.8% that has been done in the month of December. Now, this is the 5th consecutive monthly hike, and which would also this is the 5th consecutive monthly hike, which will now impact the financials of airline companies in the 3rd quarter of financial year 2018, because ATF prices around ATF fuel cost eats around 1/3 of the revenue of an aviation company. And if you see in the 3rd quarter, ATF prices have averaged around 56,450, which is 12.6% higher compared to the corresponding quarter last month. Also, the ATF price in the 3rd quarter of 56,450 is the highest in the last 3 years. So we'll definitely see some impact coming in the financials of the airline companies in the 3rd quarter because of the high ATF prices.
Swami, thank you for that. November auto sales have begun trickling in. Automakers have started reporting their sales for the last month. Yatin is standing by with a report card of how they fared in November. Seems like a good month so far for both four-wheelers and auto and two-wheelers, Yatin.
Yeah, clearly, if you look at it, we have seen the last year's base is quite low because of the demonetization month. And if you look at most of the companies, they have reported strong double-digit volume growth. So on an overall basis, if you look at it from Maruti to Eicher Motors to, Ashok Leyland, be it a two-wheeler player or be it a commercial vehicle player, everybody has posted strong growth. As far as Maruti is concerned, they have reported, growth in excess of 14%. Of course, this is led by strong growth in their two flagship models, which is Baleno and Brezza. Similarly, if you look at Ashok Leyland, Tata Motors and Mahindra tractors, we have seen strong double-digit growth. In fact, if you look at Mahindra and Mahindra automotive segment, we have seen good demand as far as the SUV segment is concerned. Of course, for Bajaj Auto this time, we had seen good domestic market growth coming in, especially in the three-wheeler segment. Of course, two-wheeler disappointed in terms of expectations, but on an overall basis, given the fact that we had seen traction in the three-wheeler business as well as the export markets, the overall number for Bajaj Auto came in quite healthy. So far, if you look at it on an overall basis, we have seen the auto companies report good numbers, and the two-wheeler players also are expected to do well. Hero MotoCorp and TVS Motor are yet to report their monthly numbers, but if you look at the estimates, we are expecting strong double-digit volume growth for all of them.
All right, Yatin, thanks so much for that. We'll stay with the auto space, and as we get into the month of December, automakers typically tend to see quieter sales momentum. That's because a lot of customers prefer to delay their purchases into the new year. To counter that pressure, we've got a whole bunch of discounts coming in from various automakers. Krishanu Mukherjee gives us the details on what exactly is being offered and who's giving you the best offer.
The trend that is being seen in the auto sector right now is being seen after a lot of years. Now we're at the end of December, the first day of December. Indeed, today, discounts usually end after the end of the festive season, which ends in the first week of November. But even into December, the first week, discounts are very high across the industry, be it passenger vehicles, be it two-wheelers, and definitely commercial vehicles, where discounting trends are like never seen before. Now, the reason that the dealers cited for this, we spoke to dealers of passenger vehicles, of two-wheelers and of commercial vehicles yesterday, is that at the retail level, demand for vehicles is still lackluster, while the companies may be showing high growth numbers, or at least double-digit growth numbers for most. At the wholesale level, at the retail level, the story is different, is what the dealers are telling us. Also, another grudge that the dealers spoke about is that automakers, despite there not being a demand at the retail level, seem to be piling up inventory with dealers. Now, the inventory levels, which we're also getting from FARA officials, is at over 6 weeks. This is the industry average in the passenger vehicle segment. Thanks to Maruti, it's at around 4 to 5 weeks. For two-wheelers, it's at around 6 to 7 weeks, and it's a similar inventory level in the commercial vehicles segment also, which is an aberration when it comes to the first week of December, when inventory levels normally are lower. So the trend is not seen before in a long time. The discounts are very heavy, even going up to 15-20% higher discounts on year as they were in the same period last year. And this is because the demand in the retail space, from what we're getting to know from dealers, seems to be lackluster.
Krishanu reporting there. Well, despite the sharp surge in Bitcoin, the biggies in business are still shying away from it. Goldman Sachs CEO Lloyd Blankfein is still skeptical on the cryptocurrency. In a conversation with Bloomberg's Alex Steele and Michael Bloomberg, he says it's too soon for the bank to have a Bitcoin plan. Listen in.
I'd say life must be really, really rosy if this is what we're talking about. It just feels...
This is what Wall Street's talking. Okay, so I was talking I was talking to Jeff Curry over at Goldman the other day, and he said the only thing that people are asking him are Bitcoin and EVs. So you're a huge investment bank. You have to be
must be really rosy if this is. Yes, I'm thinking about it because I get asked about it. I said, look, where I am is it's not for me. But there's a lot of things that weren't for me in the past that worked out very well. If you told me that if it was 20 years forward and it worked out, I could tell you why it worked out. But based on everything I know, I'm not guessing that it will work out. But I can't say, I'm not going to stand there and be strident and say it's a fraud. It can't, because it might.
Alex, I think also people confuse Bitcoin with BitChain. There is a blockchain. There is a technology where you can have different accesses to data. Different people can control it. You can see who's doing what and that sort of thing. And there are places where that is a useful thing. In fact, the Bloomberg system is a blockchain. We just, instead of having the users control it, we control it. But it has all the attributes of that. Bitcoin is something very different. Bitcoin, and there's a whole bunch of cryptocurrencies that have been started every day. You have a new one. That's something very different. And whether or not the governments of the world will lose control of monetary policy, I'm skeptical. They're just not going to let that happen, and they shouldn't.
Something that moves up and down 20% in a day doesn't feel like a current, doesn't feel like a store
and it's
value.
just being quoted up and down.
Fascinating conversation on the future of Bitcoin. Out of time on the show. Thank you for watching.
Good luck.
Are we live?